RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Happy Juneteenth, I think this is called. Not quite sure if I have the naming correct, but a pretty important holiday for our American brethren down south. U.S. stock markets appear to be closed today, 19th of June, but I did see Canadian stock market was open. I'm not quite sure if this is just a U.S. thing. Chris was telling me I actually gave myself permission to sleep in today because I had the introduction to options class yesterday, and it went 4 hours. So talking for 4 hours with a student, I was absolutely burnt out yesterday, and I just after class I just like crashed on the couch. Then transferred myself to bed, and I was just like, oh my goodness. I drank lots of water trying to recover. I tell you, man, teaching those classes, especially 4 hours, it's draining. But it is kind of a quasi holiday here in North America. Market's very slow. Actually, Chris was telling me a couple half decent opening range trades there in gold and crude oil this morning. Kind of ironic. I give myself the day off. But I think Chris said that he participated. I always like to just start off. Of course, we have our little itinerary here, and it sort of keeps me honest. What I'm supposed to be doing. Oh, we don't have our itinerary on the screen here today. That's interesting. How am I going to know what the hell I'm supposed to talk about? Anyway. Oh, okay. Chris is saying the itinerary took the day off just like you did, Brian. You were supposed to be trading today, but you weren't. So itinerary took the day off too. Well, I hope you're having a good break, itinerary, wherever the hell you are. Let's see. Interestingly enough, it does look to me like the market has resolved to the upside here, breadth-wise. Did have a really interesting reading on Sjord, super excited. Sjord has been battling like a dog trying to get this system back up and running. We had a major crash earlier on in the year, and he pretty much sort of just rebuilt it from scratch, but I suppose that's what had to happen. So anyway, for the S&P 500, the broader stock market sure looks like things are looking rather uppy here. I will say, though, as you can clearly see on the screen, one sector of the market is just on its knees right now. And we've talked a little bit about it historically. If you have been playing this crypto game, I've been playing this crypto game literally day in, day out for like 10 years. And I've just noticed that, around my birthday, I give everybody warnings, Brian's going to shit on you. And there's my birthday present to all of you. Merry Christmas. And then usually what I find is that the latter part of June, there's some sort of just face rip meltdown in the market heading into the end of it's the end of the school year. I know there is a big tax loss selling event down in the southern hemisphere, so that there might be some driven events around that. Also, too, of course, we have this MICA regulation stuff happening over there in Europe, so there's probably a lot of humming and hawing about that. We did have one gentleman, the CRV promoter developer, who caught a nasty cold there and was liquidated. You liquidate me and I liquidate myself. If you can remember what that reference is to, then I know that you're a crypto old timer. So the FUD is flying rampant in crypto land right now. It's interesting to see the stock market and even the bigger cryptos, especially things like Bitcoin. It appears Ethereum to a certain degree is dodging the trouble. But a lot of the junior names that really you can't hedge, they're all getting smoked here. Also, too, we have a pretty big options expiry coming up here on Friday. I would imagine, ironically enough, half of the reason why you see the market moving the way that it is probably all around that derivative expiry on Friday. And actually, we had a good, like I said, a 4-hour introduction to options for the level threeers, which we talked lots about the implications of options expiries and how uh, the 1% sort of set the public up with the inception of the SEC to actually believe that this is a fair level playing ground and everybody's supposed to report and be good corporate citizens. And then it turns out that with the advent of options, they moved all the crookery and all the sneakiness and all the outright corruption over to the options markets, where they don't report to any regulator. On the Twitter feed, God, I point out week in, week out, month in, month out, year in, year out, the absolute crookery around the options markets. Really is worth everybody learning how this game works to really understand how crooked the whole damn thing is. But oh well. I suppose if you do feel like it, you're more than welcome to join TRI's education program. Like I said, I'm teaching a level 3 program now. With the students are now in the options part of the level 3 program. We're in there for about a month or two, and they are going to get a very firsthand look at how this whole game is played through the derivatives market. So I would expect, if you watch Thursday offering with Julian, he likes to review the Max Payne idea. So he's bought into this idea that the derivatives markets heavily affect prices. So we do talk about it quite a bit, and check out probably if you haven't before. And I don't really promote it that much. But TRI does have a Twitter feed for the site, and Josh actually does most of the posting for this. But I also have a Twitter feed my own. It's salty. It's a little bit colorful. If you know who this guy is, then I know that you know crypto. And if you don't know who this guy is, you really might want to take some time and really understand what the hell you're getting involved in here with crypto, because this guy actually is par for the course in the crypto space. That's why I have him as this front cover picture. I think he is the absolute perfect articulation of how crooked these stupid humans can be. And he had absolutely no qualms about stealing people's money right in front of their faces. Of course, with a funny little mask on, right? Blah, blah, blah. It's terrible. But anyway, I do, if you want to follow me, CR Investor, on a regular basis, I do produce these options reports and illustrations of how Wall Street, and really probably more appropriate, Whacker Street, how they really manipulate this market. So anyway, maybe check that out. Because it is a holiday, there isn't a hell of a lot of news going on here to drive the market. It's interesting, the headlines that we're seeing are U.S. mortgage rates lowest in almost 3 months. We've been talking, the audience through this. The irony of it all is that, actually the stuff that we do is absolutely spot on. So you have probably seen this conversation from me repeatedly of late. This whole inflation deflation gauge, and how it is pointing, it's a heavily positive number, so we are still very much in the inflation world, and we will be here for probably the next a long time, probably next 30-40 years. Keep in mind that the banksters, of course, want their interest payments. If you live in a deflationary world, that means the value of money is falling. And if anything, you should have negative interest rates in that kind of environment. And so, of course, the Fed, being sort of a puppet of the bankster class, they would do everything in their power to make damn sure those interest payments are consistently coming in and the Rothschilds consistently make a very healthy, respectable income off of the backs of all the human slaves, taxpayers. So, and that situation ain't changing anytime soon. I think that the banksters have fully pulled off this great reset. Vladdy over there in Eastern Europe, he's tried to his best ability to try and upset the apple cart, but that's like I think it's completely landed flat on its face. So I don't see anything checking the banksters, and if anything, all of these politicians are complete sellouts. And really, I think nobody's got any balls in this world to stand up to the banksters. Just that simple. Um, so, the point being that we did have something happen in the market relatively recently, the top in energy prices, the effect of these fairly high short-term interest rates. In fact, just to give you an illustration of the relative position of interest rates, we are on the high end. There's no doubt about it with regard to short-term interest rates. So the Fed cranking up short-term interest rates dramatically. And you can see we're now, if you just use this as a 25-year gauge, I would actually prefer to have much more data to look at, but Big Brother doesn't want us even thinking about what that last century looked like. So interesting how the data sort of mysteriously stops at 2000 for these kind of places. But anyway, point of the matter here is you can see when the dot-com bubble burst, good old Allen, he took rates higher, and of course, manufactured wars. Hate to say it, but anytime you have a war economy, that is very, very inflationary unto itself. And you can see that we're basically at the same point. What a surprise! We're back into a war economy. Um, I don't even think most Americans even realize how much of a war economy is. And I might even argue, of course, through the sickness, you had corporate welfare there through the pharmaceutical sector, and geez, they made out like bandits, and basically that kept the economy going. That particular sector was sort of the leader of the economy. And then I might argue that they rolled over into, funding Eastern European countries. I mean, ridiculous amounts of money that they're throwing at these people. But what the hell? We got to make sure democracy is maintained. Anyway, point here is that is very inflationary. And then on top of that, Mr. Biden and all his socialist buddies there, especially when they were running Congress, they jammed through just absolutely insane spending packages that I don't think were really warranted, but very, very inflationary. And really, these governments are running just absolutely staggering deficits. I suppose you could argue now we have basically the baby boomers on welfare through Medicare, Medicaid, Social Security, all of these old age pensions and stuff that are guaranteed by governments. Well, that's just basically socialism. So, not really a big surprise, but what we are starting to see is the consumer is really starting to feel the pain. And last Friday we had University of Michigan consumer sentiment numbers come in really ugly, and we are seeing a lot of pain out of the consumer right now. Tragically, and I can see it around TRI. You could argue that big function or sort of driver of the public's participation in things like the altcoin market and stuff. Right, well, that's the consumer, and the consumer really isn't that happy right now. And whether it be raising taxes, whether it be collapsing standard of living, whether it be rising mortgage rates, mortgage payments, whether it be, what I'm hearing is a lot of credit card delinquencies. They're starting to ramp up. You put it all together, it doesn't surprise me the consumer's feeling a lot of pain here. What does surprise me, and I suppose in the end of all of this, I guess it makes sense, but the Fed doesn't really seem to care about the consumer right now. And if anything, their only tool to try and control this inflation deflation problem their only real tool, of course, well, they have two, but their primary tool is this in short-term interest rates. So they need to keep interest rates as high as possible for as long as possible to try and slow down this very overheated, a very hot economy. Hell, I even still see a lot of help wanted signs. So I don't think that we're even at the point where the sort of the economic engine, or if you will, has actually been broken yet. And the only way that they can really do it is they have to just punish the shit out of the consumer. I think we saw data just recently that things like retail sales are now starting to fall off a cliff. Which in a way, I mean, I mean, the damage has already been done, which is really sad. But if you do want to try and get some stability in the system, got to really calm down those retail sales. It's way too strong. And how do I search for retail sales on this? I know there's a way to do it. Why can I not see it here? Search, here we are. This is probably the best function of, I don't know whether you remember over the past months or so, I've been pointing out how U.S. retail sales, they're calming down. And if anything, this isn't so bad because, remember through that sickness when they just threw money. I mean, hell, they had us all locked in our cages. They were jamming through, interest rate reductions to zero, stimmy checks, the whole damn thing. And I remember Mr. Druckenmiller was very upset at what these central planners did. I mean, you're not supposed to have 18% retail sales growth. There's your hyperinflation there, folks. So if anything, we need this to calm down. The question is ultimately, do we go negative here? And if you do start seeing this thing emming out and breaking down, my hunch is that's the point at which the feds will say, okay, fine, enough is enough. We'll maybe back off on the interest rate increases. I think in the short term, what's really driving things, and one reason why I don't think you're going to see the Fed lower rates is our market-based inflation deflation proxy. It's getting nice and happy there, but is there something that drives this? And keep in mind, U.S. markets closed here today, so we won't see this data here today. But I think I pointed this out. Commodity prices and energy prices in particular are a huge driver here for inflation. And they're starting to tick back up. Where's my daily chart? I slept in today, so I didn't really do anything here in the crude market today. But I do have, where are we here? I guess it's this one. If we look at what energy prices are doing, a week or two ago, and what I think a lot of the bond market was sort of operating off of a week or two ago, hey, we were feeling pretty good. But look how quickly this market has taken back. I mean, basically, we're right back at April prices in the energy complex. I don't know how long lasting this is, but this does look like a bull ABCD, which means that we're probably going to head right back up against the top end of the range here. I've been hearing a lot of people talking about how this hurricane season should be a pretty nasty one. I am hearing a lot of talk about like Miami is underwater and lots and lots of flooding. Of course, poor homeowners there in Florida, their home insurance prices are going through the roof. But if we start getting lots of talk about hurricanes coming into the Gulf, you might find that this energy price is right back up, pressing to new highs. And I think that this will be translated into higher CPI prices, higher PPI prices in the months ahead. And I think this is the reason why the Fed won't be able to cut interest rates anytime soon. And if they do cut interest rates, then this thing's just going to take off like a rocket. And interesting too, this is kind of a side note. It's not really today's Econs or anything, but I was very impressed As I said, TRI, we've been having a bit of a challenge over the past few months because this wonderful engine that we've invested so much in kind of broke there a few months ago, and we've all been, we as a team have been scrambling trying to get this thing back up and running. And super pleased to see that it looks like we finally got the screeners back, sort of operating and actually producing results. And gee whiz, look who actually popped up on a screener result here. I was quite shocked when I saw this. Let's see, maybe I need to refresh that page. Good old Occidental Petroleum. Dun, dun, dun. And I'm a huge fan of W's within W's and W's moving through 50 lines. You can see how we're just coming right up to this 50 line right now. Beautiful RSI pattern. We are at the bottom end of the range, and lo and behold, what letter of the alphabet is that? And this is actually I remember I was talking to you there a second ago about energy prices moving up. This thing's spitting out a buy signal here. And actually, if we go over to Trading View, our engine, it has all the screening criteria tools inside it. So it might not be the best graphical representation, but look what happens when we pull this up on Trading View. This chart is just, it's spaghetti and ice cream. It's just yummy as hell. Where the hell is that chart? I guess that's over here. Oxy, there it is there. Look at that chart. I mean, if I was going to build a screening engine to try and screen and tell me ideas that look attractive, holy Shiite Muslim. I mean, that's everything. It's so perfect. I mean, the only thing that we're missing here right now, I suppose, is I just want to see a nice W on the other side of this trend line. Look at this beautiful volume surge there. Oh my God, that's it. That, level oneers, you're going to be doing volume impetus and understanding money flows. You can see how the bears are slowly falling asleep. They were in control, slowly falling asleep. And then the bulls, they were obviously super in control here, but, bears woke up and the bulls sort of disappeared. Look how the bulls are coming back here smartly. So, volume itself, nice big green candle breakout there on that event. Look at the just the prettiest momentum turn here. This is exactly what I wanted to see out of our screeners. If anything, Julian, he should look at this and go, wow, hot dang, right? And then, of course, W's within W's, Brian's funny little approach to RSI. First W stops the bear slide. Second W, that's a buy signal right in there. Not moving through 50 line on this, though. So we're coming up to the 50 line. Yeah, a monstrous, oh my God, this thing's going to just go absolutely apeshit crazy would be a move through that 50 line. But nonetheless, pretty good buy signal. I think the problem here for this particular chart is just we need to get through the trend line and probably W out on the other side. But gee whiz, I mean, perfect location. Indicators all turning, volume ramping up. And then, so this is the technical side of the picture, and it's great to see the screeners all over this. Now you have to ask yourself, okay, well, what's the fundamentals going on here? Actually, that's more accurate. Well, that's even better, right? What's the fundamental situation? Why would this be doing this? And lo and behold, if you don't like the Beamish, maybe, although I don't know where we have it. Do we have it over here? Anyway, I'll just see if I can do this quickly. And, sometimes they say, the smartest thing to do in the market is just simply follow the smart money. You don't need to overthink this. Just what are these big fat cats doing? And is that something maybe I should be participating in? And look who's all over this damn thing. And what's shocking is Buffett's now he's got his stake all the way up to 29% of the damn company. Holy crap. So Buffett came in here hard on the buy side. And of course, we all know that Fink, this is one of his favorite stocks. So, I mean, if it ain't broke, don't fix it. And if Buffett's coming in on the buy side and the screeners are telling you, hey, look at that, we got 90-day reload zones. I mean, fantastic trade location. Hell, you could even probably just go off of these lows here. We're still in reload zones. And really, you could even argue for fun that really all this is just basically a big fat Wyckoff check of the original breakout bottom there. And then you could also argue, well, this is also a weekly Wyckoff check because that's a big weekly, or maybe even, hell, we could probably see it on the weekly charts. There it is. That's a big weekly W right in there. I mean, that's everything that we teach at TRI, at Trade Location. So, long and short of it here, great to see the screener starting to produce results. This is exactly the image I want to see out of price momentum. If I'm thinking about buying, a nice little added treat. It wasn't in the screener, but it's great to see the volume ramping up. And why? Because the biggest investor in the world is stepping up and buying more. So I was super, super pleased to see that. But at the same time, too, if Occidental Pete is a buy and the smart money's coming in and buy and it's energy, what direction do you think these people are thinking energy prices are going to go? I mean, I don't think they're going to be thinking that the prices are going to go down. That's for sure. And unfortunately, and this takes us back to the original question, sort of comment of this is, have we seen the best of this indicators reading, and does this thing start Wing out and starting cranking back up? We did have a nice little window there where it did feel like price pressures were falling. Hell, I even saw prices at the pump were coming down, which put a nice smile on Lily's face. And you heard like fast food restaurants were thinking about trying to reduce prices. Grocery stores, no, I didn't see any relief at grocery store. But on balance, it just felt like a little bit of relief. We'll see how long lasting that is. But with that energy market looking the way that it is, I don't think so. And interestingly enough, you're starting to actually see, and I think it is a direct function of these energy prices. The headline today is, and that's where I started this whole conversation off a few minutes ago, was retail's, no, where are we here? Where's the headlines? Where are you headlines? I guess maybe I had it back here. But the headlines here today are things like, inflation is coming down, and unfortunately, that's right, mortgage rates lowest in almost 3 months. Well, you saw the inflation deflation gauge. It does make sense. Prices were coming down. Also, too, we had like UK inflation back to 2% target, so they're feeling all proud of themselves. I don't know whether I have a feeling that if energy prices do start rising again, commodity prices start catching a bid, we get talk of hurricanes and stuff in the Gulf. It is that time of year when that stuff should start getting going in earnest. And we're probably going to see a lot of these good news inflation prints start to get checked a little bit here. So I hope you enjoyed that nice little reprieve there in inflation. As I had said there a moment ago, it is a holiday session. There's nothing really happening here in earnest. Interesting how this, I guess that's the NASDAQ. These guys are, that's kind of odd. I don't know whether these are futures quotes or maybe CFDs or something, but I don't think they should be trading. But anyway, is there anything else really to review here today? I don't think so. Probably should have done our little itinerary. Suppose we could take a quick boo. The stock market itself, like we showed you with the breadth, seems to be pointing up. It looks to me, in all honesty, like we're in some massive price channel here. And ironically enough, we had this bullish bot set up. I used to trade this bot years ago when I was at prop firms. Boom, boom. And then, so that's the A to B there. And then C to D, there is our bought price objective, 56.25-ish. Wouldn't even be surprised if we get some sort of blow off top into 127s, basically come up and tag the top of that channel. You could probably also make the argument that A to B and C to D. Okay, well, yeah, according to this, we're probably getting a little long in the tooth. So I wouldn't be surprised. And also, too, we got this July 4th holiday weekend coming up. Remember, there is big options expiry. Actually, kind of a fun experiment here, before we head out. Let's go see, though I'm not sure where I wanted it. I guess we can get rid of Oxy here. God, that's a good looking chart. Gee whiz. Way to go, Stewart. You're back on track, kicking butt. So proud of you. Let's go SPY. All right, there's your spiders sitting at 548.49. My hunch is probably 550 as a huge open interest on the strike. So let's see what we got there. And does this become one of these kind of things where they take it up into the strike on the calls and they have the calls auto exercise? And that's the one reason why I don't like people to use the call volume and the call open interest to gauge where they're going to take the market out on options expiry, because a lot of times they want the calls to auto exercise, and that way the public who bought the call, they all automatically buy, they get forced to buy, and then they dump the market following that. And it's a beautiful way for Wall Street to sell a bunch of stock right up at the top of the market. And, let's call a spade a spade. Is Willie stupid? You should be able to answer that. Is MACD potentially going into divergence here? We're pushing to new highs, and yet MACD is not going to new highs? Well, that's problematic. And interestingly enough, remember we looked at the OxyP chart and the volume. Look at the volume here. Something's not right. If we actually get a volume bar now in the coming probably week or two, if you get a volume bar on this SPY less than 40 million, the number right here, it's right here. So if we get a number less than 40.09 million traded, that becomes a message that the bulls have fallen asleep. So interesting to see. The bears are nowhere to be seen here. We might just drift for a while. But let's go look at that options strikes, and let's see whether there's some incentive for them to take this market up to that 50 level. So the big monthly contract expiry coming up on the 21st, right, which is basically in 2 days. This is a quarterly option, so a lot of fund managers use these June options. The open interest should be pretty big. And sure enough, look at these numbers. They're huge. On the call side, interesting that 550, there's 28,000 calls. I mean, for fun, just do the math on this. Let's call it 29,000. Each option is at $100 shares. So on a per share basis, that's 2.9 million shares. 2.9 million shares times $550. What kind of money are we talking about here? This could be a lot of money. We'll just do the round number. There you go. Equals, boom. What's a friendly $1.6 billion between friends? So that's what's riding on this one expiration here. And if they take the market out at like 550.05, then that means the people that wrote these options, they will have the stock called away from them. And the public, whoever it was that bought these options, they are going to have to buy at 550 even. And do you really want to come in on the buy side and buy this thing right here? Seeing the way Willie is? I mean, we all know the message. If Willie is stupid like this, you got no business being on the buy side. Maybe you have to wait for the break. The market finally breaks. Then W's start coming in. Okay, great. Now I can get back in on the buy side. But coming in here, and especially with the way the volume is just trailing off here, oh boy, does that look trappy. So I wouldn't be surprised. We're like 548.5. There's probably at least a couple more bucks to go here. They usually say that most of the options business is done on the Thursday before the big actual expiry date. So I wouldn't be surprised if there's like a big pop in the market tomorrow. Now the question ultimately is, where do they need to take this market out that the as many put options as possible all expire worthless? And notice, as soon as we get above 550 here, look how the open interest just falls right off a cliff. Look, if they can take this thing out above 553, which really isn't that much, look how many options there are of these strikes. I mean, basically Wall Street hits a home run. So there is some incentive for them to push this thing a little bit higher, but you can clearly see they hit a massive home run on these options. All of these options are all going to expire worthless here. So way to go, Wall Street. You'll won again. But do like the idea. Let's keep an eye on the end of that Friday event on how these 550s here, how the market acts around that strike. So, I think that's basically your market. Maybe in the after party, we'll go look at the Bitcoin options, see if there's any shenanigans around that. Hint, 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 there probably are. And interestingly enough, this does not look like a chart I want to go out and buy in a huge panic right now. So, in the after party, maybe we'll take a look at this market and see what it's trying to tell us here in the tea leaves. Okay, I think that's basically your report here for a holiday session. It was an interesting conversation about the inflation deflation coming up against this trend line. Energy prices are starting to move back up. Smart money's starting to load up on oil stocks. So is that sort of the best that we saw out of the inflation picture for a while? My hunch is yeah. But hey, it was fun while it lasted. All right. Have yourselves a great day. PMA for the win. All the best. The only thing left behind to say to you good people is bye for now.